Good morning, everybody. Andy Tuttle here with the Tuttle Group at Fairway Mortgage. Hope you're doing well. Just wanted to give you another DFW mortgage market update. A lot happened this week, and I think if last week we discussed about a good spot where we don't want to get greedy at the top here in price, and we're in a good position if you're getting contracts in to go ahead and look to lock. And that we had a busy week coming up this last week. We had housing starts this week. We had mortgage application data. We had the Fed talk about many of the Fed members talk about the Fed to stop buying mortgage-backed securities. There's a lot of discussion around that, and we'll be following that story over the next few weeks and let you know how that is going to translate to what interest rates can do. But we also had initial jobless claims and existing home sales. So we had a lot happen this week, and we ended the week really where we ended last week. But let's kind of go through it a little bit, tell you what happened, and tell you what to expect here over the next week and what that may do for you. So last week, we ended the week on the 13th. We had a little bit of a rough day on Tuesday, but because of the housing starts number came in worse than expected. But Wednesday, the stock market went into a lot of trouble. So we actually had a nice rally. We actually locked a couple of clients on that day for you there just because there was a nice opportunity for several of you. So we did that. But after that, with initial jobless claims coming in, better than expected, really in line with expectations and better than last month. We're looking for a good jobs number in April. That put some pressure on the bond market again, and prices started to fall. And I'll tell you this, today we're kind of flat. Or yesterday, excuse me, we were kind of flat. We ended the week flat, so rates really didn't change week over week all that much. So that's good news. Again, we're in a great spot, but this is really should be exciting for you out there if you're looking to buy a home. Existing home sales just had their biggest report in 10 years. Home sales are up. Now, inventory is still tight. Went from average 45 days of inventory to now 33 days of inventory nationally. And so inventory's tight, and what that should tell you is that, look, I know it's hard out there trying to find a home and making offers and getting competitive, but the tight inventory, good jobs numbers, those things justify the fact that you are getting a good investment on your home. Remember the numbers. These rates today are so fantastic. If you look in this email, you'll see, or on this blog, you'll see the cost of waiting analysis as well to remind you that buying now versus waiting a year when rates are up a point and appreciation is up another 8%, that's going to create a $40,000 to $60,000 delta in affordability versus buying now, putting 10% down on a $200,000 home. In a year, you get 8% average appreciation here in DFW. That's $16,000 off of your $20,000 investment. That's an 80% return. You cannot get that anywhere else in the marketplace, and you're going to have a lower rate now than you will then, so you'll be able to afford more. So just remember that out there. It's tough, but rates are excellent. Get aggressive, get out there, get with your realtors. We know you're working with great agents, and we will be here to help you with the financing and try to do what we can. We do a really good job helping our clients only have to make 2 offers to get our average client makes 2 offers to get a house under contract, where nationally they make 6. So we're here for you. We do a lot of things to help you be competitive, but it's worth it. Stick with the good fight. Rates are great. You should be in a good position this next week as well. So good luck out there. Happy hunting, and we'll talk to you soon.